Hi there, you're watching the daily edition of Your Trades on ET Now. This is Priyanka. I have my co-anchor Shyansi with me. What we clearly saw was that, the kind of bullish momentum which was built up because of the global factors, be it the US markets, bond yield softening, Asian markets inching higher, dollar softening, that actually fueled an optimism that we did start with gains, but we did not got follow-up gains. We did not we do not go through the follow-on gains, not even on Nifty, not even on Bank Nifty. So the indices actually traded in a very narrow range after opening. Merely some 70-80 points on Nifty. Bank Nifty did jump first to some 400, 500 points, but we did not see a follow-through. And that's what we saw, very range-bound trade, very sideways move, what we have seen on the index. But then good part was that, yes, at least there was a momentum in banking stocks. Banking stocks were also buzzing. If you look at the PSU space, PSU basket, it was buzzing yesterday also and today also. If you look at the move in terms of sectoral gainer, PSU Bank were leading from the front. Metals were the second counter. Dollar has softened. A lot of news related to aluminium. Cabinet moves also came in, which supports a lot of industrials and metals. PSC commodities, they were buzzing in trade today, but at the same time, stocks like which are touted as the defensive pack, they were at the back foot. Pharma, FMCG, and even IT. And we've seen it, the kind of moves we've seen it earlier, but now it's a clear risk-on rally what we saw today. And amid all this, what we saw was a life insurance counter, especially after the HDFC Life, good numbers, bullish brokerage report. That one just surged over the roof, over the moon, and then entire life insurance space was buzzing what we saw today. Some other counters which were buzzing was sugar stocks. They were in action today. Adani Group stocks were in action today. So select pockets were, were buzzing today. But, it was a very range-bound kind of session what we've seen. So maybe more cues is what traders are actually waiting for, waiting to watch. And that, of course, the larger part is earnings. Today's Reliance numbers post the markets. What did you
absolutely. Speaking of earnings, let's also take a look at some of the other stocks that were also buzzing away on the back of earnings reactions. Then when you take a look at HDFC Life on the back of that mixed quarter three, you did have that 7.9% gain coming in as far as that particular counter is concerned. So that's HDFC Life that I'm talking about. When you take a look at CET as well, a weak third quarter is what you were looking at even as far as that particular counter was concerned. So largely, those were the kind of earnings reactions that you saw. Other than that, there was, of course, L&T Technologies. That was the one that had an inline set coming in. And 8.2% is the kind of move that you saw coming in as far as that particular counter is concerned there on your screens as well. Uptick of 8.2, 8.3% is the kind of move that we saw coming in as far as that particular counter is concerned. When you take a look at RVNL, Delivery, and Trent, these were also stocks that were buzzing away in trade. RVNL on the back of that order win where they've received that letter of acceptance as well. And you did have a brokerage note coming in on a host of counters, the likes of Zomato and Trent. And there was a downgrade that was actually weighing heavy on Trent as well, because you do have Kotak that has downgraded the counter to a sell as well and also cut the target price even for this particular counter. Even Delivery was buzzing away in trade on the back of that launch coming in of that rapid commerce, a 2-hour delivery service that is specifically meant for brands. So largely that was the kind of handover that you were looking at as far as earnings reactions and some of those brokerage reactions then were concerned. But let's tell you what, let's take this conversation then forward with Lakshmikant Shukla, who's a technical analyst, institutional research at Yes Securities. The first question, in fact, that I had for you in terms of the sectoral picture that you're seeing, you do have IT that is at this point just sort of languishing in trade as well. So what do you make of this particular pocket of the market then?
Today, I think Nifty IT and FMCG, Nifty IT and Pharma was the only two sectors which were languishing. And if we look at the structure of Nifty IT index, then it is approaching toward its 100-day moving averages, which is placed around the mark of 42,850. And when TCS result has come out, then we have seen upside move. But after that, Nifty IT gave up all the gains and started trading near its 100 DMA. So I think we could expect some breakdown below the levels of 42,800. So that would be the support levels for IT index. And once it reaches this support, then we could see further downward pressure in the in this IT index. So even if we look at the stocks, except TCS and Infosys, most of the IT stocks are not performing well. Even we have seen profit booking in SCL Tech due to the unfavorable management commentary, and we have seen sharp decline. So overall expectation of downside in IT index, what we could infer from looking at the chart.
Okay, Lakshmi, do tell us, this was your view on the IT pack now, but to help us understand that where are the markets headed to? Because, from last 2 days, what we have seen is that market is a very range bound session. And today also, it was a very tight range in which the index moved. And, completely the indices failed to fall, to generate or maybe to go leg up from here. Are we in for more consolidated session? What is that you're reading on indices, on Nifty and Bank Nifty both?
See, after 7 to 8 days of decline, Nifty has respected the psychological levels of 23,000 mark, and then after it has made a narrow range kind around 100 to 150 point of range, and for the last 2 to 3 days it has been forming doji kind of pattern. Still, we are missing that follow through of buying. So, but however, it has retained its previous swing high of 23,350. So, moreover, we expect the consolidation in the upcoming sessions with the key support levels which are placed around the mark of 23,000, followed by 22,800. But while moving on the upside, Nifty could face challenges near its 23.6 Fibonacci retracement, which is coming from the recent decline from the top of 24,857 to 23,047. So I think that would be the crucial hurdle for Nifty to surpass it. So 23,500 would be the major hurdle. Once Nifty crosses this 23,500, then we could say that Nifty will out of the wood, and we could see some more higher momentum in the index. Now talking about Bank Nifty also given extended this pullback move, but again, while moving on the upside, it need to surpass its immediate hurdle of 49,500 until we get a decisive breakthrough of the levels of 49,500. View remain tentative in Bank Nifty, and we could see profit booking if it failed to cross that 49,500. Then in that case, it could retest its prior swing low of 48,200 to 48,500, where its firm support is seen. So for moving of the on the upside, it need to surpass the levels of 49,500, from where we could see some more strength in Bank Nifty.
So seems like till the time markets indices are not going to take a decisive move, the further leg up or maybe the buying action would not would not come up with a conviction. But then in that case, Lakshmi, what would be your top trades that you want to recommend to our viewers?
So I think, as you already said that in at the beginning of the show, that some of the insurance stock are getting traction in the market. So my first pick from the insurance sector, that is ICCI GI. So I have seen a consolidation breakout in this stock, and day before yesterday it has formed a hammer kind of formation, and today we have seen follow through buying momentum with the formation of bullish candle. So I think that would be the good stock from where we can see strength in the upcoming sessions. So one can buy around the levels of 1,900 to 1,905, and could expect the upside move toward the levels of 2010 with the stop loss of 1,850 on the downside. Second recommendation is related to Nika. So this stock has given falling trend line breakout on the daily chart, and we could expect a double bottom breakout on the daily as well on weekly chart with the formations of bullish candle. And for the last 3 days, if we look at the structure of Nika, then it has been forming higher tops and higher bottom. So we could expect that upside move, or we can say pullback move, will extend higher toward the levels of 185. While taking long position in the stock, one can has to keep the stop loss of 170 on the downside. So these are the two picks where we are seeing strength.
Counters that Lakshmikant Shukla is taking stock of in terms of the ones that make it to his list. But thank you so much with that, Lakshmikant, for joining us. But with that, let's also shift focus then to the auto pack, because we do have Samir Arora who shares a strong bearish stance on the sector. What's the rationale behind his view then? Let's also go across and listen into what he then had to say about this particular sector.
So I think the worst sector globally and locally, in theory, has to be auto sector. India has to make peace with China, at least in areas which are not sensitive or security type related, because in some of these areas, China is so far ahead of India. And these would, as of now, include EV and maybe solar cells and all these things. The point is that in some of these areas, you are never going to catch up. So the best way is to let those guys in, force a partner on them, force how much X amount, stake they can have, force some localization requirements, force some export requirements, but let them in. But imagine if two of those are allowed in. If they are partners of our existing companies, then those companies will do well. But if their partners are some new companies, then our existing guys will fall 50%.
Okay, we stay for a short break here. When we come back, we'll get you more news. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at numbers coming in from Axis Bank that has reported its third quarter numbers. And on your screens, you should be able to see shortly. Now, when you take a look at NIIs, they've risen on a standalone basis. 8.6% is the kind of move that you've seen coming, at least as far as the NII is concerned. When you take a look at the profit after tax figure as well, 3.8% uptick is what you saw coming in, largely an inline set as far as the numbers are concerned. When you take a look at the interest income as well, 10.7% uptick is what you're seeing coming in there as well. And even when you take a look at the PPOPs, 15.2% is the kind of uptick that you're seeing. As far as that figure is then concerned, tell you what, let's connect with Rahul Malani, who's a research analyst at Mirae Asset Sharekhan shortly. But before we do that, let's also take a look at what else they're reporting in terms of the provisions figure, Priyanka, because that is also important to take a look at.
Absolutely. In fact, the bank had kept a provision of about 3% on quarter-on-quarter basis. But then on the face of it, the kind of, numbers which have come in, because Axis Bank did post a superb set of number last quarter also. And this was, amid the, in fact, entire private bank space, barring the IndusInd Bank, because, there were different scenario for the MFI space. But then Axis Bank did post a stellar set of numbers last quarter also and this quarter also. We'll get your reaction also, but at the same time, NII, which was, which is nearly in line to what our estimates was, but at the same time, PAT has risen by 3.8% for the banks. NII really matter. Look at the terms of the advances and deposits. In fact, the advances, what we were expecting was 1% of jump on quarter-on-quarter basis, as well as deposit, what was expected was a 3% surge on a quarter-on-quarter basis. But then we'll have to get more details on the loan book growth, which would remain softer versus the peer. We'll get you more details, but here in more details coming in, the gross NPA is at 1.46%. Whereas, the expectation for this quarter was 1.44%. Actually, the gross NPA which has come in is 15,850 crore, whereas the expectation was 15,466 crore, which is an up of about 2.5% quarter-on-quarter basis. So this actually reflects maybe the asset quality. They were concerned for asset quality in this quarter in terms of the gross and the gross NPAs are concerned. But at the same time, let's try to get you more on the advances as well as the deposit. How much is the deposit growth that bank has registered this time, or is it because in terms of banks, what we have seen is deposit growth has been a key catalyst for many of the banks, but at on the face of it, there is a jump in terms of NII for bank provisions, as well as more on the loan book, as well as on the advances and declines. Will get you as in more data flows in. But then let's get you more stories. Another story on the L&T Technologies North America segment, according to Amit Chadda, who's a CEO and MD for LTTS. Let's listen in what exactly he had to say about the demand picture and the roadmap for the margins ahead.
We are seeing a robust pipeline. We are seeing a number of large deals in play, and across all the segments. Demand is improving, and GenAI spends are up, software-defined everything spends are up, Industrial automation spends are coming up. So we do expect that next year will be a better year for the industry as compared to the current year. Next quarter margins will continue to trend upwards, and I do expect it to improve over a period of time. See, we still have the pyramid to play with that we will work on. We will need to continue to leverage our utilization, as well as the big thing is leveraging automation and Gen AI to be able to continue to deliver revenues without increasing too much of headcount. Having said that, we are on track to add 2,000 freshers in FY26 in the company. So all of that in play as we move forward. A lot of work to be done, but exciting times ahead.
All right, and that's the word coming in from the management at L&T Technologies. But tell you what, let's also take a very quick breather on the show. More news and updates on the other side. So see you then.